There's an overwhelming amount of financial advice in the news and on social media. Who do you listen to? Are they looking out for what's best for you? How do you tune out the noise? In this podcast, trusted advisors Emily Agosto, CPA, and Amanda Vaught, JD, bring their extensive education and experience to delve into all aspects of personal finance. Emily and Amanda make topics like investing, taxes, and financial planning interesting and accessible. And they provide a framework to help you think through the plethora of financial advice and news out there. Are you ready to start making the best personal financial decisions for you? Welcome to Connecting the Dollars with Propel Financial Advisors.
Hello everyone, we are back with another episode, and today's overarching theme is going to be about financial advice that we see on the internet, whether it's TikTok or a Wall Street Journal article, anything in between. We're going to talk about if it's good advice or if it has some questionable value particularly. And then we're also going to get into a listener question, which is whether or not to set their business up as an S-Corp. And we get that question a lot too. So we've got a lot to say about it. At least I do. So before we get into it, how are you doing, Amanda?
I'm really good. We're gearing up to travel for Thanksgiving, which I was just saying we haven't done in probably 10 years. Because I hate traveling at Thanksgiving so much. At some point I just swore off it. I said I'm not doing this anymore. Yeah, so I'm feeling a little nervous.
And you're driving?
Yes.
Okay.
Yes.
Be a long one.
Yes, right. And I'm going to Chicago, which is your neck of the woods. And the weather looks okay. I know Chicago at Thanksgiving, it can be really hit or miss.
You never know. Yeah.
Yes. So,
well, hopefully you'll have a safe and easy drive, and join me in the Midwest.
Yeah, because you're staying local, right? Yeah,
I'll be here. Nothing special, just some nice downtime. Well, with my family, of course. That is special.
Watching the Bears, eating Italian beef, doing Chicago things.
Yep, that's all we do here. Deep dish, hot dogs with no ketchup, etc.
Oh, never. Yes. Can't forget the celery salt.
Oh, I love celery salt.
Yeah.
Anyway.
Okay.
This is not a Chicago podcast. We could go on and on. But let's jump into...
Speaking of, we can do another bear episode. I don't know, our longtime listeners might remember we did discuss the bear season 1 and the impacts, like what lessons you can learn for small businesses. Maybe we should do that for season 2 of the bear.
I haven't watched that yet. I need to catch up still.
Oh, okay. Well, okay. So that would be an opportunity to leave us a note in the comments if you want to hear our financial advisor thoughts on the bear season 2.
Absolutely.
Okay, sorry to interrupt, but
no
yes.
problem.
I was going to say bad financial advice on the internet. You could record endless podcast episodes on that topic.
Oh, yeah, absolutely.
It's just constant barrage of bad financial advice on the internet, right?
Yeah, there's bad, and then there's like maybe not bad, but not for everyone. Or, it's like blanket advice out there that is really only ideal for a small handful of people. So like we always say, it's not a one size fits all. Personal finance is personal. But let's jump into this particular article. It's on the Wall Street Journal, and it's called what does it say? What is it called? Your 401k is falling behind. Here's what you should do. So, right off the top, it's coming off as a very advice driven article. Like, this is the right way to do things. So, try to keep, think of that with, take it with a grain of salt, if you will.
Yeah. But I mean, it's the Wall Street Journal, I feel like in general does a good job in their personal finance columns. So this is in no way saying that they're a bad source of information, because they tend to be one of the better sources. It is the Wall Street Journal behind a paywall, requires a subscription. So we're going to include a gift link in the show notes and the YouTube comments below, so you can read the article in case you don't have a subscription. But yeah, so, and getting into it, I think in general, I just want to give a little background, assuming our listeners haven't read the article. So I mean, the premise of the story is that for a lot of people, especially people who have target date funds in their 401k, which is a lot of people because a lot of 401ks only offer target date funds. There are very limited choices of investments. And target date funds have been really struggling the past 2 years. And for a lot of people, I think this is making them uncomfortable when they check their 401k balance.
Right.
Like, what is happening? This is what, I'm told I'm supposed to buy, and it's not working. So that's how they get started on this. And there's been a number of articles online addressing this topic because it is becoming a problem for people.
Yeah. And a lot of people don't even they don't even know they can, or maybe they can't direct their own investments in a 401k. So a lot of people just kind of get into those target date funds and assume that's the only option.
Yeah, it's a low cost indexing approach with very minimal control over what is actually in it. You just get what, Vanguard or whoever your provider, whatever they're putting in their index. I do think one of the main issues, which is what they address in the Wall Street Journal article, is the bond portion of the target date fund, because bonds are known to be, this ballast in the storm. They're supposed to be a capital preservation vehicle. You might not get as big returns, but they're also not supposed to be going down by the numbers that they have been. By not supposed to, I mean in people's minds. Obviously, they can go down by a lot, and that is feeling like a much riskier asset than it has in the past.
Right.
So the journalist gets into this and says, essentially, what you should do is just stick with your 401k target date fund, which is, I work a little constrained because we can't give investment advice on this podcast. So we can say that advice might be okay for someone, but not okay for another person. I do think that, there is the behavioral issue where we say people who don't check their 401k tend to have the best returns. And that's not because of any of the investments in the 401k. It's behavioral reasons. Like, the worst thing you can do sometimes is mess with your portfolio, especially when it's down, because if you start selling things when it's down, what does that mean? You're selling at the low point, which is the exact wrong thing you should be doing. So you definitely want to avoid any kind of behavioral response like that when you're making these decisions of, should I get out of a target date fund or not? The other counter to that, right, was the Warren Buffett quote. I had it on my screen. Now I lost it. Oh, here it is. The most important thing to do if you find yourself in a hole is to stop digging. Which I like that quote, but which was what he's saying is, if your investment's going down, instead of sticking with it, maybe you shouldn't keep riding with it further into the hole. Maybe it's time to get out. And so as an investor, which one do you do? Do you follow this Warren Buffett advice of, okay, I don't want to go further into a hole? Or do you listen to the behavioral side and say, oh, I really shouldn't mess with my 401k. I should just leave it alone. Right? What's somebody to do in that situation, right?
Yeah,
Emily?
that's a quandary. Because how do you know? Maybe tomorrow the stock that's going down is gonna jump up tomorrow. I mean, there's so many little aspects that affect the market. It's kind of just, I don't know. I don't have the answer.
Yeah, no. And right, I don't think anybody does really.
Right.
And it's different strokes for different folks. I mean, I would say I think target date funds are not very good investments because you don't have the ability to change it. You're reliant on somebody else to do it for you. But at the same time, most people using a 401k plan don't have the ability or the knowledge to pick better investments. So if you look at it that way, then okay, you know, what are you supposed to do? It's good enough for a lot of people.
Yeah.
Um,
Yeah, especially probably young people getting their first 401ks. Like, I mean, that's the best thing you could do is just start one. So whether
yeah.
it's in a target date or invested differently, like you're just happy they have one. But eventually, as you start getting closer to retirement or as you start having more responsibilities and payments and whatnot, maybe you take a closer look, do some financial planning with someone, with an expert, and change it up. So
Yeah.
if you're in that position where you have a target date fund and you don't really care to look at it, but you could be doing better, maybe now's the time to reach out to us or, let's get another opinion.
Yeah, get some professional to look at it and give you a second opinion.
Mhm.
Can't hurt, right? It's better to get a third party neutral person helping you make the decision rather than you having to say, what should I do? I'm not sure. And feeling scared, and then that scared or nervous feeling is going to drive emotional decision making, which can really hurt you in the long term.
Yes.
It's definitely okay to have emotions about money and investing, and trying to pretend like you don't
Yes.
is like, what? Of course you do. It's your
Mhm.
money, it's your livelihood. You're going to have emotions about it. You can't like turn that off. But I think what you need to do is recognize that it's happening and then come up with a strategy of how to handle it when you recognize that it is happening. Um,
Makes sense.
yeah, so
What else does
um
this article recommend if you are not going to stay in your target date fund or not going to stay in your current investment strategy?
yeah, so then that's like phase 2 of this article is they do say go ahead and stick with target date funds, which I think we've gone over that a little bit. And then they transition to don't give up on bonds, which this part of the article I think makes some really great points, and I would recommend that you read it, but we're going to skip over that part for now, and get to the towards the end of the article where they say consider tips, which is an acronym, TIPS, and that's for a treasury inflation protected security. And so that's a type of bond that is inflation protected, so that once you cash in the bond at its maturity date, it's going to increase by the amount of inflation. Um, and which, they talk through how you can do a bond ladder using tips, which is, say you have a bond mature in 2023 and next one 24, 25, 26, you ladder out, space out the dates. A bond ladder can be a great strategy depending on if it's appropriate for you, right? But I think what the reporter really missed here is the fact that the vast majority of 401k plans, which is ostensibly what this article is about, do not allow you to access the tips bond market at all. Like, it's just not a choice.
Right.
And which I think is the real problem with 401k plans at the end of the day, is that they really limit your investing choices. And I think we've been over this a lot, Emily, right?
Oh,
Like,
yeah.
this is key, right? This is
Mhm.
why we say investing choice is important, and why we say put money in your 401k plan to the point where you get your match, but then put money in a Roth, put money in a brokerage.
Yeah, diversify
Otherwise, you're
potentially.
tying up your money in this 401k plan. And, what if you want to change something? What if you want to do this tips ladder that Wall Street Journal is recommending? You can't. I mean, it doesn't make any sense, right?
Yeah.
And I think that's so important. And this would be a key time to say, if you're worried about the bond market, and the 401k plan only allows you to access the bond market through the Barclays Ag, which is the generic bond index. Like, what are you supposed to do? You don't have another choice,
Right.
right? So if you do decide to go the Warren Buffett route to stop digging the hole, you don't really, where are you going to go?
Right.
You
Yeah.
know?
Yeah, and it's super overwhelming to even try to think about another other investment accounts. Like a lot of people say 401k is good enough. I'm not going to think about it, whatever. And like we said, that could be maybe a good approach for you. But, as you're getting older and you're trying to get yourself set up for retirement the best way, it's really important to look at account choice, and have those different options of pre-tax, post-tax savings, taxable accounts, so that you can really do a financial plan that will work for you and have these different options to set you up for retirement and for success in the future.
For sure. Yeah. Because I think we usually talk about different account types. We tend to focus on the tax treatment, which
Mhm.
is important, right? To have the different tax diversity. But the investment diversity available to you through the different accounts is also can be very important.
Yep,
Right?
absolutely. There's
Yeah.
a lot of little things that we don't always think about. It's just like, that's my retirement account. That's it.
Yeah. Yeah. And I mean, I could go off about the bond market for ages. And I think the bond market is so important right now. That it's just really, and most people don't really get it. Like, and on the news where they talk about all the time, stock market. That's it.
Yeah.
That's it. And the bond market can be a very important part of your investment portfolio. And it does get a little bit complicated. And,
Yep. It's
you know,
confusing, but it's
it's
important.
confusing. Yes. Yes. So,
All right. I think that was a good, yeah, this article is really interesting. And I think, though, as we said at the beginning, we look at the source it came from, and you don't necessarily have to take it as like, this is it. It's from the Wall Street
mhm.
Journal, so it's gold. That's it. Um, we're not all financial advisors. So it's hard to discern what you should take and what you should leave advice wise. So you
Yeah,
need
we just
to
wanted to
talk to an
provide
expert.
some color and some background.
Exactly. Well, let's take that information and jump over to some of the things you might see on TikTok and on YouTube. I've actually seen a lot of good like budgeting hacks for people,
Mhm.
and I think that can be really helpful. One of our clients recently introduced me to a book that I can't remember the name of completely. I should have looked that up, but I will link it in our show notes. I think it's called something like Profits First, something like that, where
Okay.
the main idea is basically, instead of having one checking account, you just split up into like 5 or 6 checking accounts. This is for small businesses, by the way, or geared
Mhm.
towards that, where you have your income account, you have your money you're going to pay yourself, you have the money that is set aside for taxes, and then I can't remember what the other ones are off the top of my head. But I think it's actually a really nice way for some people to see where their money is, where it's going, you have to do a lot of planning around your funds when you're a small business owner. And it's a nice visual representation of what is encumbered, if I can use a nerdy accounting word, so that you don't spend it or think you have more than you do.
Yeah. Is it called Profit First? Transform your business from a cash eating monster to a money making machine.
That sounds correct.
Yeah. Yeah. I do. Yeah. Some of these personal finance books are really helpful.
Mhm.
But sometimes the advice does get really generic and
Right.
you're like, well, does this apply to me or not? That's when the rubber meets the road, right? And then if you do follow some of this advice, I mean, the issue is the person who writes the book isn't accountable. So if you follow their advice and it doesn't work for you,
Yeah.
then what, right? If you
Mhm.
have a professional on your side who is looking out for you and giving you personalized advice, and that advice doesn't work out for you, not that we ever give that kind of advice,
No,
right,
why would
Emily?
we? Never.
I mean, then you have to answer to somebody. You have to
Right.
it makes their advice like a different level.
Absolutely.
Yeah.
And I think something like that is pretty innocuous, having multiple checking accounts to visually see where your money is. Um, but there's so many, like before you even get there, if you're running a business, you need to make some more important decisions, like For example, how are you going to be taxed? What type of business structure are you going to have? So that kind of leads us into this listener question, which is, should I set myself up as an S-Corp or an LLC? And there's a lot in that question that I would have to explain before. There's no simple yes or no answer. Just like everything we talk about, it depends. So the first part of, when you decide like, okay, I'm going to start my business, here I go. The first thing is setting up your legal structure, right? So that entails, well, it depends if you are going to be a single owner or if you're going to have a partner or multiple partners. If it's just one person, which the person who sent in this question is just a single person, they can be an LLC or they can be an S-Corp, I'm sorry, a C-Corp for their, almost slipped up there, for their legal structure. You can also be a sole proprietor. That's like kind of a separate thing that doesn't, it just, you get an EIN number for your business part of your financial activities and call it a day. But
I just want to, the lawyer in me wants to cut in just for a second.
Please do.
So LLC, right, stands for limited liability company. And that's why it's a legal status, because you're a person and then you have a separate legal entity that's the business. And the liability part of that is if you are sued, right? So if you're sued as an individual, that person suing you can access your bank account, your house, whatever your assets are, right? If you have a separate legal entity that's a business and you have a liability issue and you're sued, then they can only access the business assets. So setting up a separate legal entity like an LLC, limited liability, that's limiting your liability as an individual, so that if you do have an issue in your business and somebody sues you, they're not going to be able to get your house. That's the idea, right?
That's a great explanation. That's very helpful.
Yeah, so that has nothing to do with your tax treatment. That has everything to do with protecting yourself and your assets from lawsuits, essentially.
So both LLCs and C corporations are legal entities of themselves, like apart from an individual. So once you have your legal structure, I mean, you should be doing this at the same time, but once the legal structure is decided upon, think about your tax structure. So this is where you can elect to be, if you create an LLC, you can elect to be taxed as an S-Corp, and you can even elect to be taxed as a C-Corp. So if you don't file your legal structure as a C-Corp, you can still be taxed as one if you file as an LLC. All these details.
Yeah, it's complicated very quickly.
It's complicated, yes. So for this
particular, and this video is already longer than a TikTok video. So just pointing that out. Okay.
I think we have some other recordings and maybe another podcast about this, but to give kind of a general overview, S-Corps are super popular on the internet. You can find so many YouTube videos, so many websites just saying like, open an S-Corp, why wouldn't you? And that's
save money on taxes.
Yeah, that's exactly what they say. They say open an S-Corp and you'll save money on taxes, like it's a guarantee. And there's so many aspects that go into that. It depends on your industry. Like, do you have employees? Like, what is your income going to look like? Is this a service-based company? Is this a product sales-based company? Like all those things can affect.
What state are you in?
Yeah, absolutely. That too. There's different tax percentages or income tax rates in every state that come into play. So when I see people just giving blanket like be an S-Corp advice, it makes me a little crazy. And sometimes, and they do a really good job of convincing you. I watched a YouTube video recently. I was like, oh, he's got a good point. And then of course you have to take it with like, okay, that is good advice for someone that it makes sense for. It's like just one step in the way to decide how you're going to be taxed. Like I'm glad people have these resources to look at, but it's almost like, why are you convincing someone? Like, he doesn't get anything if someone becomes an S-Corp or not. So it's a little confusing to me as a CPA. Where was I going with that? The point is, it depends all over again. S-Corps can be great, but when you're just starting out, usually, and if you're just one person, usually you want to keep it a little more simple, right? And a single member LLC is a lot more simple to manage than an entire S-Corp. An S-Corp has its own separate tax return. You have to set up payroll. There's a lot more administrative work that goes into it, not to mention tax planning, because and you would need to absolutely have a CPA, have an accountant, an attorney to, run things off of and ask questions, because S-Corps can be very tricky and a lot of people do them wrong.
Yeah.
So what else?
I was going to just mention we can link to it in the show notes. There is a tax person I know just through networking who created this AI bot where you can ask the bot questions about S-Corps.
Whoa, that's cool.
Yeah, so I was playing with it a little bit before we recorded this, and it can't technically give you tax advice, and there's all these disclaimers saying this is not tax advice, you need to talk to a professional, but it was really helpful, I think, for answering a lot of just basic questions like, is an S-Corp right for me if my profit is $5,000, if my profit is $100,000, if it wouldn't respond based on states. So, like I'm in New York, which has a different tax treatment than somebody who's like in Tennessee who has no state income tax. It would just stick to the federal level questions, but I think it was sort of fun to play with. So I would say try it out.
Ask those questions to the AI and then ask an expert and see if they match. Could be fun.
Yes, exactly. But I think I know the person who made the bot, and I would trust her more than a random person on TikTok.
Fair enough.
But also it is just an AI bot, and I don't know. It's like a thing lately, right?
Oh, totally. It's all over the place.
Have you heard of AI, Emily?
Yeah, that's how I start all my conversations.
It's going to replace all the tax preparers.
That's okay. I'm good.
Yeah.
I'll go retire somewhere.
Yeah.
If I wish. Okay. Anyway, I forgot what I was going to bring up, but I'm sure it was brilliant. If I think of it, I'll add it to the show notes, and feel free to reach out.
And we love to help people with these kinds of questions, so please reach out.
Yes. It's really bugging me now. I can't think of what it was. Anyway, we'll move forward. I'll leave that in the past. But if there's anything that you would like to ask us, please reach out at info@connectingthedollars.com. Everything will be linked in our show notes and on our website. And we'll talk to you next time.
Yep. Okay.
All right. Thanks. Bye.
Oh.
Okay,
so Emily remembered what she forgot to say at the end, so we're recording a little PS here because I think getting a great foundation for your business is very important. So go ahead, Emily.
Okay, so what I was going to say is that once you choose to be an S-Corp, like that is your entity, there are certain ways that you can change from S-Corp to C-Corp. I can't remember. There's all very specific rules from the IRS that allow you to change from one entity to another, but you can't ask AI, be like, is it better for me to be a LLC this year or an S-Corp? And they'll tell you one, and then next year it turns out your profits were different, so it's better for you to file the other way. You can't just keep flip-flopping every year depending on what your profit and loss is. That's all I wanted to get in there.
Yeah. So choose wisely, because the decision is going to impact you for years to come.
It's important.
Yeah.
All right.
Okay.
Bye.
That will do it for this episode of Connecting the Dollars. Nothing discussed in this episode should be considered legal, financial, or tax advice. If you like what you heard, please subscribe for more at Apple Podcasts or wherever you get your content. When you do, please give us a rating and a review. To see the links we mentioned in our show, along with other great Propel Financial Advisors content, go to connectingthedollars.com. You can find our past episodes there and subscribe to our newsletter. And if you're still here because you have a general question, you can email us directly at info@connectingthedollars.com. Or, if you're interested in working with us, click the Schedule a Consultation button on our website. Thank you for listening.